Hey everybody, it's Chuck Barone. Thursday, November the 2nd, 2023. Another wild day in these markets, man. Crazy times, guys, I tell you. The markets react to the data as it comes out every day, looking for hints. It's like trying to read a friggin' crystal ball. But the market's having a great day today. Good news for Powell and the Fed. Not great news for the economy. Anyway, we'll get into all that. Before I do, let me just take a half a minute and welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys watching the videos and hanging with us. All right, so let's talk about these markets today. So we knew today we were going to get a couple of pieces of data. The most important piece being the jobs unemployment report. That came in a little hotter than expected. And also we were going to get the unit labor costs here, which kind of gives the Fed an idea of what's happening with the cost of hiring and keeping employees. Both of those came in to the Fed's advantage today. Not great news, like I said, for the economy. More unemployment and falling labor costs are not good for the economy, but it's good for what the Fed is trying to do. And after Powell's presser yesterday, the market picking up hints that the Fed is pretty much done raising rates for this cycle. So the market in celebration mode, man, rocketing up today. The Dow jumped 564 points, man. A great day for the Dow. 33,839 on the Dow. The NASDAQ up 232 points. A big day for the NASDAQ. 13,294. And the S&P, the broadest market, up 79 points. 4,317. So across the board, stock market blasting off today. This is just a little bit of a foreshadowing of what's going to happen in this market when the Fed is confirmed to be done raising rates in this cycle. And it might be looking actually more like rate cuts coming. That's going to blast the market off, man. So if the market can hold these levels until the cuts come, going to be happy time for investors. The bond market today kind of is, again, just a weird market. The longer end of the bond market really rallying it, man. The 10-year jumping with the yield coming down 12 basis points. Wow. So 4.67% now on the 10-year, which was just up near 5. So that's coming down really fast. At the same time, the 2-year today actually up 2 basis points, sitting at 4.99%. So now the inversion, which was narrowing, now stretches back out a little bit. I think that this is kind of a reaction to the 10-year part, especially the idea that the Fed's done cutting. The 2-year, of course, is the bet against maybe not. But this bond market has just been crazy. The bond market is supposed to be the quiet place. It's the place where, retirees go and very conservative investors go and they clip coupons. It's not supposed to be gyrating up and down like this where capital gains are the play. It's just not usually what the bond market's all about. So we're living in some very strange times for not only the bond market, but the whole friggin' economy, right? The dollar today was down small, sitting at 106.17 on the index. Still strong number. Gold today, metals had a weird day too, another mixed day, with gold rallying $2.20, sitting at $1,984.70. Silver falling 20 cents, sitting at $22.79. Retracing its way back down to about $22.50 where it caught a bounce. Interesting numbers. I'm starting to like silver at $22.50. I'm really going to like it. Gold, gold's high. It's expensive. I think silver is the play, especially for smaller players who don't have thousands and thousands to buy gold coins with or gold bullion. Silver inexpensive and an easy way to play the market. Oil today. Bounce day for oil, man. It's been coming down pretty dramatically. Today a bounce, up $2.05 per barrel. I think partial these tensions in the Middle East helping with that. West Texas Intermediate's now sitting at $82.49, basically gaining back all the drop it had gained and had. So there it sits. I still believe that the trend in oil is down, but the numbers today going the other way. Bitcoin today up very small, up $108 for Bitcoin, $34,884 for Bitcoin. A good solid number, man. There's no denying it. Whether you like it or not, people that bought it at 16 are having a party today at 30, almost 35. So I know it's a little bit speculative if you don't know what you're doing. But it's nice to see I know there are people that watch this show that are owners of Bitcoin. Nice to see you guys get some relief. All right, so let's talk about jobs and the data we got in today. The jobs report came in a little hotter than expected. They were expecting 210,000, which would be basically what they got last week. It came in at 217,000, so just a little bit hotter. Now, they've been revising these numbers down, actually. So we'll see if that ends up staying there or not over the next couple of months. But they said that the reports that I read say this is kind of a seasonal thing. I don't know. I thought kind of seasonal hiring happens in the fourth quarter, but whatever. But jobs giving the Fed a little bit of a break. Now tomorrow's report becomes even more important. At the same time, the reporting comes out today showing unit labor costs falling pretty dramatically. The last quarter up 2.2%, this quarter down 0.8%. That's a pretty big change, giving Powell a little bit of help from the economy, the Fed. Now, don't get me wrong, the Fed, yesterday's press for the story was high bond rates are doing the Fed's job for them. When you see the 10-year dropping 12 basis points in a day, that may not be there for Powell too much longer. But this is just telling me that the way we're seeing this is probably right. We are going to have a recession, as I've explained to you guys many, many, many times. The Fed raising rates, all that does doesn't do anything to bring prices down or slow inflation. What it does is cause a recession. And the recession then slows price increases and brings prices down. We're going to have that recession for sure. The Fed needs that recession. We've been saying it since the very beginning. The Fed needs this recession to get toward target. Now, Wall Street and the markets, the geniuses, are now busy convincing themselves that the inflation fight's over. No more rate increases. They're kind of pricing that in, and that's kind of what they want to happen, right? Powell, yesterday at his presser, pushed all the right buttons, suggesting that the rate increases may not be a need to have more rate hikes. At the same time, he was saying they're keeping that on the table, bumpity beep, talking out of both sides of his mouth. But the market reacted pretty strongly today, to that, and the data coming behind it. Powell believing the bond market could do the job of the Fed. Well, I don't know, guys. I don't know. I think that the jobs report tomorrow becomes super, super big. If it comes in low, they're expecting 180,000 jobs last month. If it comes in at 180 or less, I think the market's going to celebrate, and you're going to see another day tomorrow like you saw today. If it comes in higher, hotter, well, I think today is going to be a pleasant day that will quickly be forgotten. Last month, the economy created 336,000 jobs. Now, ADP in their little their little forecast, they had 113,000 jobs for last month. 113,000. That's down from 336. That's a pretty big decline. So we'll see where the number comes in tomorrow. We'll bring you, of course, the report on all of that. And we also got another number today that was interesting. We got U.S. productivity numbers. And U.S. productivity really rockets up, 4.7% in the third quarter. They were expecting it to rise 4.1. They got 3.6 the previous quarter, so U.S. productivity just climbing. This is going to help the Fed out because this is going to offset some of the inflation measures the Fed uses. Extra productivity is helpful. So this is going to help the Fed get closer to target. More good news for Powell today. The Fed's been needing it, man. The market has been saying, Powell has been saying one thing, but the data's been saying something else. And the market just has just been directionless. Now it looks like it's kind of picking some direction here. The market believing rate hikes are done. Earnings coming in solid. No recession. You can see why the market wants to be positive. Interesting news. We'll just quick little hits on. As a lot of you guys know, we have this trial going on, FTX, Sam Bankman-Fried, or Freed, or Fraud, I call them. The jury just got the case. So now they're starting their deliberations. My best guess is he's toast. Everything I read in the journal about it and everywhere else, even trying to testify in his own behalf did not work for him. Guess going to be guilty and hang him high, man. Interesting. Here in Vegas, the Culinary Union is in negotiations with a few of the big hotel chains here in town, Caesars, MGM, and a few of the others. Well, guess what? Having difficulty coming to an agreement, so now the Culinary Union has set a strike date of November the 10th here in Vegas. If they do not reach agreement by November the 10th, 35,000 culinary workers going to walk off the job. That's going to be tough because that's the culinary are the guys who carry your bags. They're the guys who park your cars. They're the guys who bring you your food and cook it. Not going to be easy if that goes down here in Vegas. I was reading another interesting article today. They said that the Fed not buying treasuries right now. At least they're not saying they are. And a lot less demand from other countries, other sovereign nations. Who's filling the gap on all these giant treasury auctions? Well, guess what? Lo and behold, it's friggin' hedge funds. Hedge funds buying bonds, guessing the rate hikes are done, to the tune of $2 trillion worth of U.S. treasuries. Now, hedge funds are not known for being like, treasuries or even banks where they buy these bonds and they hold them to maturity. I seriously doubt that's what these hedge funds have in mind here. So the fact they own $2 trillion could certainly add some volatility to the bond market. And lastly, I was reading this article. This was interesting. They said that right now, 11.5% of U.S. stocks are what are called zombie companies. Okay, that sounds interesting. What is that? These companies, zombie companies, they earn less in a year than they owe in interest on their debt that year. 11.5% of U.S. stocks in this category. This is a simple foreshadowing of bankruptcies coming and consolidations. But that is a big number and not good news for the economy. Anyway, guys, that's it for the day. A lot of news to digest today, a lot of interesting stuff. Tomorrow's going to be the big one. This jobs report is going to set the tone now for the end of the week and how we're going to look going into next week. I don't know where I stand at this stuff anymore. I really have been of the opinion that the Fed, if they're going to raise rates, it needs to hike them up, get it over with, let's move on. Bring that recession on. If that's what their aim is, why futz around with it, man? Let's do it. If they're done raising rates, say it. Let's get the rally underway. The uncertainty kind of bites, right? Anyway, that's it for the day, guys. We appreciate your support. We will be back tomorrow to bring you guys the news you need to wrap this week up. As always, if you have a second, hit the like button. It changes the algorithms around, helps get our video out in front of a few more people. As always, hit me up in the comments, questions, We'll see you guys again tomorrow. Till then, guys, take care. Thanks.